Hi everyone, in this video I'm going to be talking about stop hunt failures. So basically how to spot if a stop hunt that you've taken isn't going to work out, or the chances and the likelihood that it's just a stop hunt. It's not a stop hunt continuation. So just to recap, what is a stop hunt continuation? So in a setup, we've got at least 2 touches of a level, and then what you want to see is a move that goes like this: move up, move down, move up, and then move down. Well, that's what you would call a stop hunt, because it's taken out that level there. But the one we're interested in is here, and then we get a stop hunt candlestick that takes out these guys, with the intention that we're looking to get short depending on the currency pair. Let's say, for example, it is the dollar yen, and we want to be buyers of the yen, right, and shorters of the dollar, right? So we're looking at a clear and obvious level. Our bias is to try and get short. We understand about iceberg orders and slippage, and really where the financial institutions are buying the Japanese yen for an absolute bargain price before they tricking traders into going long so that they can sell. All right, so this is what we call a continuation. So a stop hunt continuation in our direction. Now the situation could be, and the question that constantly gets asked is, what's to say that prices won't do something like this, where traders will place their stop losses below here, and then we get short here, and then that just turns into a potential stop hunt for these guys, and then all of a sudden prices come back and then continue going higher. So how do we know whether this, at this area here, where we're looking for the stop hunt pin bar to close below where traders are putting their stop losses, that is definitely a stop hunt. But is that a stop hunt continuation to the downside as we want it to go to, or is that just a stop hunt before prices go higher? So one of the first things you want to look at when taking a stop hunt pin bar is whether you're going to see a strong continuation in price action. Because what I've seen, and all the stop hunts that I've traded, is you want to see prices continue going to the downside in a fairly strong manner. Sometimes prices can kind of stall a tiny bit before going down, but you generally want to see them start to go down. And if you or up in in the opposite direction, and in the examples that I've shown you in the course, you'll see that a lot, where you have prices will continue going down. What you don't want to see is, or what you should be on alert for, is if price starts to do something like this, where you get a candlestick that closes within this level, and then all of a sudden you get a stall. You get one of two things: either price starts to stall and fails to go lower. You start to see candlestick wicks where price is just nice strong, but then all of a sudden there's a move back up, and then you just get kind of stalling price action, or prices start to look like they might be going higher. That is an indication that this is a stop hunt, but not a stop hunt in our direction. It's a stop hunt potentially in the direction in the opposite direction, if you know what I mean. So that is the really the telltale sign. If you get a nice stop hunt pin bar candle short, and then prices eventually still start to fall away, then brilliant. You can have confidence that should want to at least go down to the lows of the range, somewhere in and around there, if we're right fundamentally or risk sentiment wise, etc. If we're wrong and on the other side of the market, or if, for example, on the odd occasion, and this does happen, you can get a stop hunt and then you get something like this, and then you get prices actually come higher and then decide to go down. Yeah, so it kind of stop hunts us before it goes, continues to go further down, or prices may continue to go, to the upside. So if you start to see something like this and a failure in price to continue going down, and it stalls, or prices, you start to see wicks to the upside, long candlestick wicks around this area, then that's a classic sign that price may not want to continue following through. So let's see if we can see some examples of this on a price chart and walk through it step by step. So here we have an example on the Australian dollar Swiss franc, and if we zoom out a little bit, let's go to the daily, and what we saw was a bit of a ranging market between lows, level that's been touched kind of once, twice, and we had levels that's been touched a few times at the top. So up until before we get here, up until this point, everyone would probably agree that this was a ranging market of some sort. So what we want to do is probably go down to maybe something like the 30-minute chart, and start to mark out potentially where there are some stop hunts. So there was a stop hunt failure, right, which is what I'm trying to show you guys. So there was quite a nice accurate level around these highs right here, where you had, let's get rid of maybe the daily zone, a level that had been used a few times. And let's start to see, right, so there we go. So we get to see some sort of breakout of the level. Nice strong candle convinces breakout traders to get involved, and then what we're waiting for is a pullback. What the kind of price action we want to see is where we get pullback, retracement traders in, and it fails on them, and then we want to get short on a stop hunt candle, but then we want to see signs of whether that stop hunt candlestick is going to continue going to the downside. So like I said before, you're probably going to end up seeing failures or a stall of price, in order for it to go short. So let's continue and let's look at what pretty much takes place. And then you get prices going higher, and then you get something like this happen. Very nice. Prices come down to a level where you've got some nice, very nice bullish price action, where the traders possibly getting in, long around here. Yep, possibly. But again, what we didn't see at this level was really any kind of stop hunt pin bar, if you know what I mean. Anything that we could have got involved in. We want to see clear candle closes, nothing, no close there, no close there, nothing convincing. And then we get kind of like a deeper pullback into this resistance zone, and then we get this nice bullish price action that's definitely going to get a lot of retracement traders involved. When you think about the size of the candle, when you compare to the previous candles, that's pretty much the most bullish pin bar you can pretty much ask for. So then where are the stop losses? The stop losses are going to be placed all the way here. Now what we're waiting for, if we wanted to buy the Swiss franc, we thought the Swiss franc was a bargain at these prices, if we want to wait for a candlestick that closes below, anywhere below where we know that there are stop losses from traders attempting to get long off of what resistance should turn to what? Support. This is where they place their stop losses. So we're waiting for some sort of candle to close convincingly here. And what do we get? We get a nice entry candlestick, nice outside engulfing candle. So there would have been traders, again, more traders getting involved in this, because traders may not have entered on the close, but they probably would have entered as prices started to go higher, and then all of a sudden, brilliant, boom, starts to take out these stops. Now, as stop hunt traders, we would look to place our stop loss and enter on that candlestick there or above the highs, with the intention of trading it down to the lows. Yeah. Now, what do we need to look for to find out if this is just a stop hunt and, you know, prices will continue going to the upside? Well, we have to look for price action. Now, what we want to see is continuation of prices eventually, you know, still rolling over. All of a sudden we get, you know, a bit of a reversal, bit of a pullback. That's fine. Bit of a pullback. That's no problem. But, you know, prices fail to really go lower, you know, for a good few hours. And then all of a sudden, prices now have started to look like they're stopping us out, depending on where our stop losses are, you know, above the swing or above here. Because what you want to see is a continuation. When you start to see failures, when you start to see a large move like that, then all of a sudden price can't go any lower. Chances are that you know, this could just be a fake out. Now, again, we don't know for sure that this is going to be, you know, an absolute move to the upside. Again, it depends on your fundamental and sentiment bias. Yeah, it really does, because what we're trying to do is be in alignment with the banks, not based off of price action, but based off of our fundamental analysis. Yeah, so we should already done our fundamental analysis, and then, you know, we've already got our directional bias, and if we're right about that, then we take the trade. So as we move forward, what ends up happening in this example is price continues, you know, to go higher. It takes out anyone who stops us up here and continues to the upside, and then we are where we are. So this was, you know, the banks and the financial institutions obviously saw this as an absolute bargain buying opportunity here, taking out the stops of traders who who wanted to get long. Yeah, they ended up taking those stops out before prices, you know, driving prices, you know, to the upside. But the main point in this is understanding what happens to price that will fake us out. Yeah, and if you get a stall in price and then you get maybe a strong move, a strong reversal, either immediately or you know, over a little bit of time, then that's usually an indication of the fact that this may not continue to the downside. I would just say also a word of warning. Just my personal opinion is that even if prices start going against you, there shouldn't be a reason for you to want to exit the trade. I wouldn't advise manually exiting, simply because you know, to take the loss, as long as you haven't over leveraged, or, you know, you've proper risk management, because you don't know whether price will actually stop you out. This could be just a bit of a pullback, not to confuse you even more, but this could just be a pullback, and then prices may continue going, you know, further down. We have no idea once we take the trade. Yeah, so this video is more about just looking at telltale signs as potentially why this may fail and what I've seen. But just because you see price start to go against you doesn't mean that, you know, you should exit this trade. Yeah, what I would say is, if the information has stayed the same as far as fundamentals and sentiment as to when you were entering the trade, and if that fundamental hasn't shifted, has not shifted, then there's no reason for you to exit this trade. Now, let's say, for example, this candlestick you know, ended up being an absolute brilliant, you know, news for the Australian dollar, let's say. Yeah, then maybe you may want to exit the trade. Yeah, maybe you think, so okay, well, sentiment is definitely shifted. It's positive sentiment now for the Australian dollar, and let's maybe exit this trade. If nothing has changed fundamentally, if nothing has changed sentiment wise, then I wouldn't exit the trade. Only exit if you feel, or if something, there's a news event that has occurred that has really put, a positive sentiment against you, or a negative sentiment against, your trade. That's when I would probably exit the trade. But all things being equal, if everything has stayed the same and there's no sentiment change when you entered here, and then price starts to go against you, and you're checking around and you're looking at the news wires, and you're saying, well, what's happened, what's changed, is anything happened, and nothing has happened, and nothing is maybe coming up in the market, then I personally wouldn't exit. I'll just accept that this was a trade that just didn't work out this time. But this is the kind of thing that you want to see as far as an indication as to why this trade may not work out, stalls or an immediate reversal. Let's see if we can see another example. So here's a setup on the Euro British Pound, again on a 30-minute chart, and what we've got is a nice setup here, right? Level's been touched several times. 3 looks like prices are going to the upside. Stop losses are where? Placed below the market, right here. And then what we're looking to do is get involved in price action to the upside. So what we're looking for is a move that comes up into the level. So you see where you see a bit of a level just before that bit of price action. What you want to be wary of is the fact that it's not the most accurate level. You want to see the actual previous support turn to resistance. It needs to be a bit more accurate, and you can see that when prices actually come up to this zone here, you can see where prices actually reject off of there, some selling in there, which means now that there should be some stop losses above here. And what we want to do is look for some bullish price action that goes up into here, and there's a bull candle right there. So that's what we're looking for, something along those lines, before we enter to go long, because we want to buy the euro. So then we see something like this, prices sell off again, more traders getting in short because price action looks like it's working, and then all of a sudden, oh, lovely. So anyone who got short here, looks like it's going shorter, and then we get price action that closes above the level. That is a lovely setup. I would take that if I wanted to be a buyer of the euro. So now we need to be aware of, or look for the telltale signs of what is going to make this continue to go higher, or what's going to make this fail. So what's making this move fail potentially is if we get reversals, or we just get stalling of price, and then all of a sudden prices start to put pressure on us. If price starts to stall out and starts to reverse, then the chances are this is a stop hunt, but it's not in the continuation in our direction. It's a stop hunt, stop those traders out, drawn us in, and then it's gone about its merry way. So let's see what happens, and obviously you guys can guess what happens because this is what the video is about, but I'll leave that on there for now, just so that you can see what happens. So we first of all, we get a nice bullish candle, stop hunt candle, and all of a sudden we get a bit of a stall, and then we get another failure for prices to go higher, and spike higher, and a rejection, then we get prices start to go against us. Yeah. And again, if nothing has changed, then I wouldn't move the stop loss. If something has changed in sentiment within this half an hour and a half, yeah, as far as there's a news announcement, etc., then maybe you might want to consider, getting out if it's news that has gone against you, and then we get this happen, and then we are where we are, which is all the way down here. So yeah, guys, I think hopefully you get the drift of this. What we want to see is price continue, going to the upside strongly, and then that should give us confidence that we want to take profit at probably the top of the potential ranging market. If we start to see failures in price going higher, check to see if there's anything that's gone against you, sentiment wise or fundamental wise, and if so, it looks like there might have been some potential euro news 8:30 in the morning. It looks like, who knows what happened that day, 5th of September. Maybe we can check on Forex Factory if there was something, but that's that's what you don't want to see when you get into a stop hunt type candle. But again, it all comes down to whether you want to be a buyer of the euro or a buyer of the British pound. Yeah, money is being taken, and drawing traders in, including us if we're on the wrong side of the market. What we want to do is make sure that we're aligned with the banks before we enter the trade, that the euro is definitely a bargain at these prices, and if so, if our analysis is correct, then we see this stop hunt, we have a better chance of prices continuing to the upside, or it's just going to be what we see here, where you're going to get failures in order we're the ones that are getting stopped out. So guys, I hope that makes sense. If you have any questions, you can email me at info@trading180.com, or you can post your questions in the Telegram group. All right, take care.